What is up, guys? Seth here, back again this week with another episode of Renaissance Resurrection. Today's video is understanding the different types of business income. Let's get this money talk in 3, 2, 1. Alright guys, so the purpose of the video today is twofold. So the very first purpose of the video is if you want to get into long-term investing but you don't really know how to break down a company's finances to determine whether or not the company is profitable, this video will take you through the process of understanding how to break down those numbers from a company's financial statements and make you a little bit more familiar with the financial jargon associated with breaking down those numbers. And the second purpose of this video is for me to explain to other people who are business owners how exactly you can track your different financial metrics and break them down to understand the financial growth of your business. So now with the different purposes of this video established, I'll move forward. So you might be saying, Seth, what do you mean different types of business income? You know, income's income and my business makes it, and like, okay, cool, bro, that's good for you, I'm happy for you, but there are most definitely different phases to breaking down income when it comes to understanding your profits in either your business or a business that you're investing in. So without further ado, let's talk about these different types of business income. Alright, so the very first type of business income that I'll be discussing is the simplest one to understand, and it is gross revenue. So gross revenue can be defined as the income that your business makes before expenses. And so in order to demonstrate what I mean by this, I'm going to be using my good friend here, Nightmare Whiteboard Steve Jobs. Do you see the beauty of my artwork? I'm a beautiful artist. I'm getting better and better with my whiteboard art by the day. Just kidding, this is awful. And here's the brick iPhone that I drew that Nightmare Whiteboard Steve Jobs will be selling you for $1,200. So if Nightmare Steve Jobs sells you the brick iPhone for $1,200, then before factoring in any sort of expenses associated with manufacturing or labor, just anything like that, that $1,200 that you paid for that iPhone would be the gross revenue on the sale of this iPhone. It is straight cash. Now, one thing to keep in mind with gross revenue is it is not all kept. It is simply the amount of money that your business generates before any sort of expenses. So it's your income, but not your profitability. Alright, so now that we've determined what the gross revenue of selling the iPhone is at $1,200, the next step in understanding the income in either your business or a business that you're considering investing in would be to break down the gross profit. So the way that you get from gross revenue to gross profit is you subtract out your cost of goods sold. So, going back to the original example, well first, let me define gross profit. Gross profit is the income that you keep after paying your cost of goods sold. So the way it would be calculated is revenue minus cost of goods sold is equivalent to your gross profit. So, for example, say I have that $1,200 gross revenue on the sale of this brick iPhone that I drew, and now in order to determine my gross profit, I have to figure out what were my costs associated with creating and then selling that iPhone. So, say I had that $1,200 gross revenue, but in order to create that iPhone and bring it to market, I had to pay my people to make it, and I had to pay the manufacturing fees and the material fees of creating the iPhone. So let's say that all totaled up to $400. So if you take that $1,200 revenue figure minus the $400 cost of goods sold associated with manufacturing and bringing the iPhone to market and selling it, that leaves my gross profit at only $800 on the sale of this iPhone. So you can see here that in the whole pie chart of the revenue, 1/3 of it just went away to the cost of goods sold just in materials and labor cost. And you can see the entrepreneurial smile just kind of decreases a little bit when you step through and have to kind of get your margin shrunk. Alright, so now after you've determined what your gross revenue is and you step through, you subtracted out your cost of goods sold, and you determine what your gross profit is, now you're ready to understand the next step in breaking down your business or a business that you're investing in's income, and that next step is determining what the operating profit is. So, gross revenue goes to gross profit, and gross profit goes to operating profit. So operating profit can be defined as the income kept after paying all costs of doing business. Now, the way that you would calculate it is you add your cost of goods sold and your operating expenses together, and then you subtract it from your gross revenues. Now, your operating expenses, depending on the business that you run and the industry that you're in, can include a variety of things. You know, it can be your research and development, your rent costs, your any costs that are incurred on a regular basis to keep your business operational. That is what your operating expenses are. They're not necessarily one-off things. They're something that is consistently recurring in order for your business to maintain its operations and to continue to grow. So, only you can determine what is included in your operating expenses for the type of business that you're running. So, if you take the cost of goods sold, add it to your operating expenses, and subtract it out from your revenue, that gives you your operating profit. So, if you break down the gross revenue pie chart and you see what's getting sliced off of it, now you had that 33% coming out of your cost of goods sold. Now you have a piece of it coming out in operating expenses, and you have only a smaller amount of your gross revenues remaining. So an example of this, again, say I'm Nightmare Whiteboard Steve Jobs. I sell you this brick iPhone for $1,200. I pay out my $400 in my cost of goods sold for creating the product and then bringing it to market. But then I know that I have to take about 12.5% of my gross profits to cover my operating expenses to keep my business operational for my recurring expenses. So that would be another $100 because I have $800 in gross profit, right? Well, if I know 12.5% of my gross profits need to go towards my operating expenses, then I take another $100 off of my profitability and I put that towards those expenses. So now I only have 75% of my original gross revenue remaining. So instead of having $1,200, instead of having $800, now I only have $700 left on the sale of this one iPhone in operating profit. And then the very last phase in understanding the different types of business income would be determining what your net earnings are. So the way that you can define net earnings is the income kept after paying all expenses associated with doing business and your taxes. So no business transaction would be complete without Uncle Sam getting his cut, right? Yeah, I know. I'm not a big fan of high taxes personally because I think it stifles entrepreneurship. But well, I don't think it does. But anyways, we can have that discussion later. So the way that you would calculate net earnings would be to take your revenues, you subtract out your cost of goods sold associated with creating and then selling your product, bringing it to market. Then you subtract out your operating expenses, the recurring expenses associated with keeping your business operational and expanding. And then you subtract out your income taxes. So the way that you would calculate this, right, is you would just take whatever your number was from operating profit and you would subtract out what, you would take away, depending on the effective tax rate that you're being assessed at, you would subtract that away from your operating profit. So for example, let's look at the pie chart here. You have your gross revenues. You take out your $400 in your cost of goods sold for making the iPhone. You subtract out your 12.5% in your operating expenses. So then you're left with that $700 figure. Now that $700 operating profit number, let's say you are, if you're Apple, let's say you're being assessed at an effective tax rate of about 35%. So that $700 operating profit number, you take 35% off of that, that will be your net earnings because that 35% has to go away in taxes. So Uncle Sam gets his 35% cut. That means you are now left with $455 in actual income off of the sale of the brick iPhone that you originally sold for $1,200. So that is the last phase of understanding the different types of business income. It goes from gross revenue, straight cash, to gross profit, what you keep after paying your cost of goods sold associated with selling your product, to operating profit, what you keep after selling or after paying out your costs of goods sold and your operating expenses, and then you go to your net earnings, which is all of that, take away your effective taxes that you have to pay to Uncle Sam, then you get to keep what you get to keep. Alright guys, so that is it for how you step through and understand the different types of business income. I hope this helps you to better understand your finances in either your business or helps you to better understand how to determine the profitability of a business that you're considering investing into. If you found this video helpful, please drop a like on it down below. Send the video to someone who you think could benefit from this information. And feel free to check out the other content I have on this channel and subscribe if you feel like that would be a good thing for you to do. Also, I make videos weekly, so you would be getting consistent content from me on personal development, finance, and eventually my tech stuff. So also follow me on social media so you don't miss my announcement for my next YouTube video. My link tree with all of my different platforms is in the description of this video. But you can find me on Instagram. My account is Seth.Allen1919. Snapchat is Seth56LG, like left guard, like LG. And then Facebook is Seth Allen. LinkedIn is also Seth Allen. But yeah, I think other than that, follow me on all those. And that's everything I have for you guys today. So thank you for watching. I wish you all luck in developing your financial literacy to ensure the profitability of your business or your investments. This has been Seth with Renaissance Resurrection. Until next time, everybody, I'm out.